Ah, the rich and famous. Wouldn't it be great to walk in their shoes? How they handle their fame is one thing, but how they handle their money, well, that's something we can all learn from. U.S. Trust surveyed nearly 700 high net worth people with at least $3 million in investable assets. Here are 4 key ways they have built and sustained wealth that financial advisors suggest you should do also. Number 1, delay gratification. About 80% of those surveyed said investing in long-term goals is more important than current needs. Now, not everyone has piles of cash left over after paying for things like utilities, a mortgage, and car payments, but consider this. If you put $100 towards your retirement each month instead of spending it on discretionary items, you'd have roughly $40,000 after 20 years, assuming 5% interest. Multimillionaires like Jay-Z and Beyoncé might consider putting off the purchase of an extra swimming pool, but for the average investor, foregoing expensive coffee 5 days a week or deciding against those glitzy cufflinks could put extra money in your pocket that'll grow over time. Number 2, be smart when it comes to credit. Do you pay off your credit card balances in full each month? Bankrate.com's Greg McBride tells MarketWatch those consumers should use a rewards card that earns cash and perks for discretionary spending. Plus, if you're racing to pay down your mortgage or car loans, don't. If it makes sense, pay them down on schedule and use the extra money to fund your retirement plan. Number 3, Warren Buffett does it, so you should too. That is, when investing, buy and hold. The Berkshire Hathaway CEO wasn't part of U.S. Trust survey, but 85% of those polled say that when it comes to stocks and bonds, they made their biggest investment gains by buying and holding onto investments for several years. Buy and hold doesn't sound very exciting, but Buffett has lived by that strategy for decades. And number 4, be tax conscious when investing. Bad tax management can result in giving up as much as 40% of your gains every year. That's good for Uncle Sam. But for the average investor, there are a few simple ways to shelter money from the government and increase your net after taxes. Consider investing in or increasing your investment in your company's 401k plan or an IRA. Save for your child's education in a 529 plan, or put money away in a flexible savings account.